Are you interested in learning the exact trading strategy used by a millionaire trader to turn a small account into millions? If so, you're in the right place. In this video, we'll be revealing the insider secrets of KRISTJAN QULLAMAGGIE, a self-funded and independent trader who went from a starting balance of $9,100 in 2013 to a staggering $82 million in 2021. But before we dive into KRISTJAN's trading strategy, let's take a moment to understand his background and journey as a trader. KRISTJAN QULLAMAGGIE is a self-funded and independent trader who has achieved impressive results in the markets. He began his trading journey in 2011 as a day trader. But like many new traders, he struggled at first and ended up blowing up his account 4 times in the first 2 years. However, he eventually discovered a simple yet effective strategy that allowed him to turn his small account into millions. One of the keys to KRISTJAN's success has been his disciplined approach to risk management. He has stated that you should never hold overnight positions that exceed 30% of your account balance, which suggests that he typically trades with positions ranging from 10% to 20% of his account size. Additionally, KRISTJAN has stated that his risk per position ranges from 0.25 to 1%. This means that assuming an account size of $100,000, the average size of his positions would be between $10,000 and $20,000, and the risk per trade would be between $250 and $1,000. Sounds interesting, right? Now, before we move forward, make sure to like the video and subscribe for more trading strategies related videos. We are Charged Crypto, and we love bringing these amazing trading concepts to you every single day. Now, back to the topic. KRISTJAN has also shared some insights on his trading strategy, which involves looking for big moves in the market, or breakouts that break previous formations and patterns. He believes that this approach can be highly profitable if executed correctly, and has provided some tips on how to identify and trade breakout opportunities. It's worth noting that KRISTJAN's risk management and position sizing strategy was a bit different when he had an account size of less than a few million. When his account size was less than a few million, he had a higher risk profile of between 0.5 and 1.5%. KRISTJAN has also admitted that in the very beginning of his trading career, he risked even more than that due to a lack of understanding of risk management and position sizing. This means that with an account size of $100,000, the risk per trade would be between $500 and $1,500. Now that we know exactly what his risk management and position sizing strategy is, let's take a look at the trading strategy that he has used to make a fortune. KRISTJAN uses a strategy that involves trading breakouts, which means he looks for big moves in the market that break previous formations and patterns. He believes that this strategy can be highly profitable if executed correctly, and has shared some insights on how to identify and trade breakout opportunities. According to KRISTJAN, the key to success with this strategy is to study the biggest winning stocks over the past 100 years and look for patterns of movement in stair steps, where the price makes a 20 to 50% move, pulls back and goes sideways for a while, and then makes another move. This is a common pattern among leading stocks. That means looking for a big move to the upside that lasts for 1 to 3 months and is at least 30% or more. KRISTJAN typically looks for moves that are anywhere from 30% to 100% or more. After this big move, there will typically be a pullback followed by a consolidation phase with higher lows and a tightening range. This phase of a sideways market usually lasts between 2 weeks to 2 months. During this consolidation phase, the price of the asset will bounce on and off the rising 10 and 20-day moving averages, sometimes touching the 50-day moving average. KRISTJAN describes this as the price surfing on the 10 and 20-day moving averages. To make sure the setup is valid, you should look for a breakout out of the consolidation phase. This is the final step in identifying a profitable breakout opportunity. KRISTJAN's approach to entering trades is fairly straightforward. He looks for opportunities to enter a position when the price breaks out of a consolidation phase, and he uses the opening range highs of the 1-minute, 5-minute, or 1-hour candle to determine the exact point of entry. He places his stop loss at the low of the daily candle, but he also takes the average true range of the asset into account to make sure the stop loss is not too large. As for the exit strategy, KRISTJAN advises selling a portion of the position, between 1/3 and half after 3 to 5 days and moving the stop loss to break even. For the remainder of the position, he suggests applying a trailing stop loss equal to the value of the 10 or 20-day moving average. The choice between the 10 and 20-day moving average depends on the volatility of the stock. But KRISTJAN advises beginner traders to wait for the first close below the 10-day moving average before exiting the position. To implement KRISTJAN's trading strategy on TradingView, there are a few steps you'll need to follow. First, you'll need to add some indicators to your chart. KRISTJAN uses 4 indicators, 3 of which are moving average indicators and the 4th is the volume indicator. To add the 10-in-1 moving averages indicator, search for it in the Indicator Search tab. Select the indicator made by Himanshu and add it to the chart. Then, search for the volume indicator, search the indicator made by TradingView and add it to the chart as well. Next, you'll need to adjust the settings for these indicators. Head to the settings for the 10-in-1 moving averages indicator and click on the Inputs tab. Here, you'll want to add 3 moving averages to the chart: the 10-period moving average, the 20-period moving average, and the 50-period moving average. Make sure to set the type for all of these moving averages to simple. To make the moving averages easier to see, you can also change their color in the settings. That's all you need to do to set up these indicators and start using KRISTJAN's trading strategy on TradingView. So, let's go over the conditions that were previously mentioned. First, we will need to see a large move to the upside lasting between 1 to 3 months, where the price of the asset will need to change between 30 and 100% or more. In this case, we see a move lasting around 66 days, and the price increased by about 90%. After the big move, there will be a pullback followed by a consolidation phase. As you can see, the pullback occurs here. The consolidation phase will usually last between 2 weeks and 2 months. In this case, the phase lasted about 28 days. During this consolidation phase, we see the price surfing on the 10 and 20-period moving averages. As you can see, this occurs here. Finally, we need to see a breakout out of the consolidation phase. Now that the setup has been confirmed, let's enter into the position. Unlike many other traders, KRISTJAN likes to enter during the breakout. Instead of waiting for the close of the candle, the price broke out here. So, let's enter into the buy position here. We will place the stop loss at the low of the candlestick. KRISTJAN advises selling 1/3 of half of the position after 3 to 5 days. Since the breakout happened on a Friday, we will sell 1/3 after 5 days since there is a 2 days weekend in between. So we will sell 1/3 of the position here to make sure the trade stays profitable. We will first move our static stop loss to break even. After that, we will be using the 10 or 20-day moving average as a trailing stop loss. Since we see that the price has previously respected the 10-day moving average, we will choose to use the 10-day moving average as the trailing stop loss. As you can see here, the price has closed below the 10-day moving average, so we will sell the rest of our position here. This means that we sold 1/3 of the position with around 23% profit and 2/3 of the position with around 80% profit. So there you have it, the exact trading strategy and risk management techniques used by KRISTJAN QULLAMAGGIE to go from a small account to millions. While it's not a guarantee of success, following a disciplined approach to risk management and using a proven strategy can go a long way in helping you achieve your trading goals. Overall, KRISTJAN's strategy has a high risk-to-reward ratio, sometimes as high as 15, which means that even with a low win rate, traders can still make a significant profit. If you're interested in learning more about cryptocurrency trading and strategies like this one, make sure to subscribe to the channel and leave a like on the video. Don't forget to leave a comment if you have any questions. Thanks for watching.